Korean chipmaker SK Hynix makes its $28 billion debut today on the US market, the largest American debut by a foreign company ever and the third largest listing in history after SpaceX and Saudi Aramco. Priced at $149 per ADR American depository receipt, the deal is a billboard for what investors now call Ramageddon, a global memory crunch driven by AI. Modern computing is slamming into a memory wall. Processors are getting faster, but traditional memory can't feed them data quickly enough. Standard DRAM is the choke point. High bandwidth memory is the workaround, stacking memory chips vertically and drilling thousands of microscopic channels so data can flood into GPUs in parallel. That single engineering shift has rewired the industry's economics. Memory makers have redirected roughly 25% of DRAM wafer capacity into HBM because HBM earns 3 to 5 times margins of normal memory. And no one has exploited this better than SK Hynix, which now controls about 60 to 70% of the HBM4 market. HBM has become such critical superfuel that major cloud providers are prepaying billions just to secure supply. SK Hynix has formalized its position through a co-development agreement with Nvidia running through 2030, wiring its memory roadmap directly into platforms like the Vera Rubin AI supercomputer, and the result is a structural moat. In early 2026, SK Hynix posted record 72% operating margins as it shifted from selling commodity parts to supplying indispensable AI infrastructure. The dominance was not preordained. Founded in 1983 is Hyundai Electronics, the company stumbled through failed SRAM projects, chronic yield problems, a forced merger with LG Semicon, and an early 2000 crash. After its 2012 acquisition by SK Group, SK Hynix executed a quiet turnaround. By June 22, 2026, it had surpassed Samsung in market cap, becoming a roughly US $96 billion cornerstone of the AI era. Its success is inseparable from the trillion-dollar semiconductor supercycle and creates systemic risk. Samsung and SK Hynix now account for over 53% of South Korea's KOSPI index, meaning their stock prices effectively steer the national market. When lawmakers merely proposed a tax on unrealized gains, the market erased about $500 billion in a single day, Black Tuesday, as leveraged retail investors hit margin calls, were forced to liquidate, and triggered an algorithmic doom loop that spilled into Japan, Taiwan, and the US Nasdaq. Its proprietary advanced MRF-MUF packaging delivers superior thermal performance that rivals like Samsung have struggled to match, and an 80% yield on its latest process lets SK Hynix mass-produce complex HBM4 stacks more reliably than any competitor. The $149 ADR listing is also a deliberate valuation arbitrage play. Despite its leadership, SK Hynix is traded at roughly a 35% discount to US rival Micron Technology, a classic Korean discount. By listing in New York, SK Hynix gives global investors cleaner access to its equity and invites arbitrage to narrow the gap. If its multiples re-rate towards US peers, analysts see as much as 45% upside, aligning its valuation with the central role it now plays in the AI hardware stack.